So you appear to have that, and you see these patterns in the charts. And I love that. Could you share with us? I know we're probably not going to understand because you have it all in your head, but what type of patterns or signals do you pick up on to minimize that risk for the reward or to get a higher R?
Yeah. So there's one part about pattern trading that I think everybody needs to understand too, is that I think a lot of people get caught up in label trading. I'll call it, like you may call it, you can call a bear market rally, you can call it a new bull market. Those are labels, right? Which don't mean anything until hindsight. It's the same with patterns. Labeling something does not mean the outcome is going to be certain, right? So there's a lot of people out there that, will say, well, this is a bull flag, so I'm going to get in this because it is going to go to 110, whatever. Like they think that's the certainty. If I can just label this certain thing, it means XYZ will happen, right? So I just want to clarify that although I trade patterns, you also have to understand that simply by calling something does not mean there's certainty involved, right? So, but what I'm looking for is I'm always looking for range contraction, because the simple philosophy is that range contraction precedes range expansion. And I want to be in on that range expansion. So if a stock is trading real wide and loose, if it's got real long candles, wide candles all over the place, I'm not going to do anything with that until it settles down. So I'm looking for range contraction, in whatever form that takes. But you can think of the simple things like bull flags, descending wedges. Descending wedges are one of my bread and butter patterns. And it's more about the psychology behind it than just the simple lines that anybody can draw. And yes, over time, especially if you're visual, everybody can start to pick out these simple patterns in a chart, but it's much more about understanding the psychology behind it, and what's happening with the market. If something's pulling back in an orderly manner, it's unlikely that it's forced selling or panic selling. It's, people, you can think about what's behind it and think that if there's orderly pullback taking place, it's usually profit taking, short-term profit taking, and the stock is being still supported by longer term money, the funds that are out there that have the big research teams and that are still accumulating a position, right? If you start to see something really, really tank, and go wild to the downside, it's really loose and disorderly, then you may have some much bigger volume coming in, much less conviction in the longer term holders to hold the stock. So there is a psychology behind all these patterns. So I like to look for kind of orderly pullbacks, that get tighter and tighter. The range on the candles get tighter and tighter. Volume starts to dry up. There's nothing new about this. I mean, tons of people do this. And then you want to get in on it as it starts to move in the right direction. And you're looking for that range expansion. So when the stock gets tighter and tighter and tighter on drying up volume, what you're looking for is volume to come back in and the stock starts moving higher. So really simple as that. And it can come in many different forms. I really like the simple ones, like a descending wedge is one of the most powerful ones for me.